Thursday already. And before we go any further, I just better update you guys. Some of you would be in this trade with me. I have just taken my first profit. First profit target was actually here, but I've decided that I don't like what's going on here. I could be completely wrong with that, but it's 15 odd pips in 105 or whatever the take profit was. So I'm not that concerned if it goes completely wrong with that. But it's in 15. In fact, I want it to go further. Why am I sharing? Sorry, I'm hearing echo in my headphones. I think I'm okay now. So I have just taken profit at the bottom of that bar there. Look, I hope it goes 100 miles more, that's for sure. But to risk losing what we've already gained from here, if this does retrace back all this way, then that's not a good idea for me. So I have taken an early first profit at 150.91, I think it was, that I took my profit. So if you were in that trade with me, then I would suggest you consider doing the same. All right, welcome to you all, guys. Nice to have you in the room. If you're here for the first time, welcome. Good to have you here. And please don't hesitate to ask questions if you have any. It's likely that you will, given that both Ash and myself trade a little bit different to what you are used to seeing, I would imagine. Maybe not if you understand everything well and good. If not, it doesn't really hurt you to ask the questions, and we're more than happy to answer them. If you've got any ideas, if you've got any charts you want to look at, if you got some trades that you think you might like to share with the room, then please do so. We're only too happy to do that. That's what the show's all about. It's all about sharing. And what do they say? Sharers are carers. I'm happy to do that also. So anybody who wants to do that, please feel free so to do. Those of you, actually, I'll save that one for a little bit later. I've got a very weird view of what's going on here, and that's disturbing me somewhat. I'll try and sort that out myself. Okay, what's happening today? So that was Euro Aussie. Look, why am I in the trade? Well, that was pretty clear yesterday that we had a nice reversal bar. Not quite at the level I had anticipated that it might go, but this one's really interesting. There's a massive, it looks like a temple, doesn't it? Doesn't it? It might not to you. The crucial level for me is this one here. And to my mind, we have broken through that level. That's a monthly chart I'm looking at. And we probably have gone all but retesting that level, that same level there. And that's why I thought this was a reasonable sell. As you can see from the chart, we have had many, many, many days of selling on this pair. So it was overcooked. It was certainly oversold. And it was time for a retracement. We've got that. Is it far enough? I don't know yet, but it's the first opportunity to trade it short. So that's why we've taken that. There's a clear next take profit area here at the bottom of that range, and coinciding with weekly pivot, of course. If we have reversed, then we're safe in the market. It's no big deal. So all is well. Nothing more to say on that, really. Hang on, see if we can keep going. Chances are we will get a retracement at some stage. And if that is the case, and it doesn't take out this high in our stop loss, is my stop loss in the right place, mind you? It's in its original position. Could probably come down a little bit. I might move that in due course. We'll see. As I was saying, if we do get a retracement back to this trend line or the daily pivot and don't take out a significant high, in this case it would be that one, then I would look to scale into this, add some more into this particular trade. I think that's where we're headed. We're headed down here, in my opinion. So if I can pick that up from here again, I'll add to the position. That is Euro Aussie. It's the only trade I'm in at the moment. And look, for me, it's been very, very sparse trading opportunities. And that's why I'm just really cherry picking the ones that I think are good ones. I guess we always try to do that, don't we? But normally, you know, in a week, I would get 2 or 3 opportunities to get into the market. Haven't seen that, to be fair. And no surprise, we've got geopolitical tensions going on all over the place. We've now got a different story today around that, which of course is that both Russia and Ukraine leaders, or diplomats, if you like, have supposedly, again, what do you believe, have supposedly come to the table and drawn up plans for a peace. Fantastic. I think we saw a reaction to that in the market yesterday, with things like Aussie Yen just skyrocketing. Things, well, Aussie Swiss same, but the risk on pairs, if you like, the commodity pairs just took off like skyrockets, man. Some would say that was due to the Fed. I disagree with that entirely. I think it was to do very, very much with what Ukraine and Russia potentially supposedly brought to the table. Anyway, if you look at this chart, you would really say we've got a risk on environment here, because you've got an Aussie, which is a risk off currency, versus a Swissy, which is a risk, sorry, other way around. Aussie, which is a risk on currency, and versus the Swissy, which is a risk off currency. So you would expect in a turbulent time such as a war, for instance, that the Aussie versus the Swissy might be going in the opposite direction. And indeed, I'm more than willing to get ready for that. That's why this trade line's on my chart, because I was figuring if we could roll over here, come back underneath the daily pivot, for instance, and retest that trade line, then I would definitely looking to play this short, if only to the bottom of that range. But the range is broken today, and as I say, the market appears to be risk on. Don't know if that's true of the indexes, but we'll check with Ash on that very, very shortly, I am sure. So to my mind, there's a lot going on that may not be warranted, and that's a good thing, because if this continues to go higher and higher and higher, then that's just going to provide me with an opportunity to bring it back as a retracement trade, if you like, and that's what I'll be seeking to do. But I did see the Aussie as a real trading opportunity today, given that we're at strong resistance levels. But it's just gone, phew. What resistance levels? What are you talking about? But there we are at another resistance level for Aussie. What's this? Aussie Yen. I can see a clear ascending channel here. And if you look at this level, which is 87.96, let's call it 88, you can clearly see that we've got a strong resistance area that we're approaching with or at pace. I've still got a target down here for Aussie Yen, and I'll still be looking to trade that from up here to down there. So I'm looking for a false break of resistance, perhaps. And, you know, that was my theme this morning. What's the Aussie pairs? I think they're going to turn around and we're going to get an opportunity to trade them short. Look at that. What do I know? The market's just gone kapow in Batman terms, and doesn't look like turning back anytime soon. But me, little old Robin, I'll be waiting for it. I'm sick. They're dead jokes, aren't they? Really. I like laughing.
Goodness, though, mate. They're goodness.
Obviously.
I mean, this is some of your best material.
I'm sure it is. How you going, mate?
Yeah, I'm all right, man. I'm all right.
You're well. Good stuff. Mate, the Fed,
Yeah.
I think it was a bit overshadowed by, well, from my view of the charts, it was a bit overshadowed by the potential for peace in Ukraine. Would you, is that how you read what happened?
Yeah, there's a few things actually going on. I've just taken a trade to the upside in the Ftse, but it's not a particularly safe one. So I'm not going to kind of call it for everybody, because we're right on support. We're right on resistance. I've traded long on resistance, which is not a safe place to go. But I see just maybe there might be enough strength to take us through a little bit of resistance, because, as you say, the peace talks have helped the narrative really in the market.
It seems to me that the sentiment is most definitely risk on. I scratch my head with that, but
yeah, well, it is risk on. I think the fact that the Fed didn't say anything to dampen that helped. You know, maybe that's the point here, is that they haven't really kind of added anything that would concern the market, because we knew there was going to be a rate hike. They didn't hike to 0.5. They hiked to 0.25, which, if you think about what we've been pricing in, so that we knew there was a hike coming, and considering the price of equities and anything else that was risk on in a way, it was the middle to lower band of a rate hike. Now there will be more coming, but it does suggest that we've probably got a little bit of time just to maybe just take a bit more money off, to take a bit more money out of the market before it does actually turn around. I think recession concerns maybe sort of like that, they can be pushed back a little bit. I can't see anything but a recession. I think that a recession will be coming. The bond yields are kind of telling us that as well, with the tightening of the 30-year versus the 10-year. But yeah, I think it was more as you say, that the Fed didn't do anything to suggest that actually we're going to be sort of like heading to a phase where they will be choking the economy too much at this stage. So because of the peace talks, there was also some news from China as well, which talks about some kind of financing over there, which would is also helping some of the Chinese equities, which do need it, by the way. I mean, we've got COVID cases now starting to really pick up in China, and parts of the economy being shut down again. So there are still concerns out there, and I think the big picture, the longer term picture, is that there is going to be another shock. And I don't know how deep that will be, but I think that there is some downside. I just don't know whether it's necessarily in this particular spot. Actually, this is starting to look a little bit weaker. So I'm just going to close this position here with a little bit of money.
So what you're saying is we probably don't have a real clear position right now.
Not really. No, we don't really. I think that maybe some of the upside. In fact, I'll show you my charts, mate, because I think the charts are quite interesting at this stage, and for this reason. Let me just
no breakout trade on the pound, by the way, guys. If you're hanging out for that news, I'm sure you're not. But there's no breakout trade on the pound.
Let's make sure I can get in here. Yeah, let's have a look around the charts. I've closed the long in the Ftse actually, but just because I don't know whether this is the right point for a long, and I think a long is coming, but we do have the Bank of England today. So let's just do this and do that. And hopefully we'll see my chart. There we go. Right, so this is where we are with the Ftse. We're right on this point of resistance here. The monthly pivot is the obvious target, and it may well just get up there. But I'm actually seeing a little bit. It's not weak, but it's just a bit tepid. I don't see sort of like a huge explosive move coming, which means that if it gets up here, I'd actually be more interested in the short. I'm not interested in shorting here because the market does look buoyant. But it doesn't look aggressively buoyant, which is why I'm not holding the position that I took for a long. I'm still up for a long, and if it comes back down somewhere within the range, I'll probably use the 5 minute and see if there's anything on the 5. I mean, it's going to be quite tight still there. Yeah, I probably want it down quite a bit further before taking it, or look for signals that there might be just a bit of weakness up here, because as I say, we're on resistance, and the obvious trade here really is a little bit of downside rather than breaking through this level. So let's hold out for this. But where the market looks really interesting are things like oil, and the reason oil is really interesting is look what it's bounced off. Monthly pivot, it's bouncing off the monthly pivot. That would suggest that we've got a little run to the upside. Whether it can get here, I don't know. But I have to say, overall, I'm a little bit bearish on oil. I think we're going to get another, not necessarily a leg down, but I think we see this monthly pivot at least another couple of times over the course of the month. And the reason for that is that if there is peace, or even peace talks that kind of do actually come to the fore, that would potentially be a little bit weaker for oil. The China situation could start to ramp up. We don't know. Omicron and everything and further COVID strains, we don't really know where we are with COVID yet. I think that, that story got kicked to the back burner because of the conflict. So that might start to emerge again, which would also be negative for oil. The dollar starting to potentially strengthen because of interest rate hikes could also be a little bit of a downward risk for oil. So I think that there is some moves to the downside for oil, but I think we're probably going to get into that those tighter moves from here. That the explosive move we saw, 30% move to the upside, followed by a 30% move to the downside, or near, a little bit more to the upside, a little bit less to the downside, but like a 50 to 60% swing over the course of the month so far. This is the 1st of March. This big explosive move is the 1st of March. Now we're on the 17th, and we've seen a 60% swing to the upside and downside in oil. Does that continue?
If you take your razor out, we've gone nowhere.
Exactly. That, and I think that's the point. Does that suggest that really this is kind of like more fair value than actually a point to be starting to buy this up again? So I wonder whether, if we can get back up to these levels here, which the price of that on WTI would be around about the 105, 106 mark, that we actually start to drift down again. And that's going to be dependent, I think, on what does happen with peace talks, what does happen with COVID in China. Will the Fed sort of like provide a bit more of a choking of an economy, of the economy? So with those kind of factors in mind, it would suggest to me that we may well have some downside in oil on the way. So the market has come to areas of support, and I think that it's sensible to take a little bit of a position on a bounce here. Same with gold. Again, near enough the monthly pivot. Really lovely looking bar that is. It's a great looking bar. That suggests some upside with gold, but I still don't know whether if peace talks kind of continue, will gold surge all the way back up to this near to 2100 level? I don't think so. Silver's the same. This didn't bounce off a monthly pivot, but it has bounced off a support level here. And it's created a really nice bar. Most obvious thing to do is buy the day for sure. On the break of that bar, where you're going to take profit is a question. And I think that if you're playing this as an intraday trade, that is a really nice signal from the daily. Take the intraday signals from the daily. As soon as it broke here, comes back and tests, that's a really nice signal. I mean, that's at what's that? Probably about midnight UK time, but I'm sure that there were some people in Singapore able to take it. The problem is, where does it go? Because I don't know whether gold is all of a sudden going to continue its surge to the upside and end up being a buying opportunity from here. I think oil and gold both on the short term are buying opportunities. But I think actually, as the year progresses, or even the next couple of months progress, if things are as they are today, then I don't think we do see oil at $130 a barrel, for this particular period. I think that this is potentially a bit of a range. I wouldn't be surprised at all to see oil come up to this 99 level. In fact, let's call it $100. Just because it is a nice round number. So actually, that's going to be too high. So yeah, maybe the 99 level, $99 a barrel. I think this comes back down again. I don't think that there's enough now in the fundamental tank for oil, if you like, to kind of now get us right back to the top again. So does the market
at this
calm
very
down?
moment, it doesn't look like escalating further, does it? So
what's that? Sorry.
The turmoil, the war.
Yes, it does. Yes, it does. But I suppose the question is, does that look like that's happening in the next couple of days? And that's the big problem with oil. And I looked at the COT data yesterday. COT data is cut down on both the commercials and the speculators on the long and the short position. That's basically saying this market's too volatile. It's too volatile for us to play with.
Don't want it. Yep, yep.
I mean, these are professional, big players in the market that are getting out of the market on both ends of it because they don't want to get stung. You know, they want to take a position nice and gentle and you know and see if they can get deep, you know, moves. This is a trader's. What we saw on oil was a trader's paradise. This is not for investors. You know, these aren't for people that want to that really want to get involved in a market really. So yeah, what happens next, in my opinion, for the next few weeks potentially, or maybe the next week, is some calming down of everything. You know, where we do start to hit ranges. I think we've seen that.
After that move, I mean, you look at that chart, you're going to go, what's going to happen next? Well, yeah, you're going to say it's going to range for a bit.
Yeah,
because that's the first thing looking at that chart.
Even this trend here was relatively, you know, relatively calm in comparison to this. I mean, this volatility, there's no way that can continue because, you know, inevitably people do start clearing out and saying, I can't call it. I can't call what's going to happen. And if I can't call what's going to happen, I'm going to go and trade something that I can call. So the drivers have been shocks. It's not like we've seen drivers that have been, I might actually, looks like the Ftse could be a little short here, mate. The drivers have been shocks rather than anything else. I'm just going to take a little short on the Ftse here.
I'll take a long one on Euro Aussie when you're finished.
Yeah, go ahead, mate. I've got to sort my other account out. So you go ahead.
All right. Now, notwithstanding, guys, that I am short this pair on a daily chart, right? So we're short from here, but I see an opportunity to trade this long, maybe up to this level here. So we'll just place just a small trade, no big risk on this. Actually, what account am I on? I don't know if I'm on a big one or a small one. I better go with a trade manager. Otherwise, I have to work out my risk. Nothing. Ah, that's why. Sorry, I had to answer a prompt. So we're going to go long above this bar here. And the entry level will be 154.08. Oh. Ooh. Sorry, I can't do it on that chart. I can't do it on that chart. I'll have to make a new one. If you're ready, go, mate. This will be a little while, but
yeah, okay. Let's come back to me for a moment, and I'll explain my Ftse trade. If you guys want to get involved, then there is an opportunity here. So what I want is that. Here we go. Okay, so I've taken a short on the Ftse. I'm not aiming for a lot here. It's just down to the lower end of this range again. This is a 15. So this is a 15-minute chart that I'm looking at here. And you can see that point there is the long now. Sorry, the entry. Let me just have a look. So it's 90. Yeah, it's going to be about a 1-to-1. So if you are somebody that uses stops, decent bar to try and enter a short on. You know, stops would be above this bar. I'm just taking profit down at this level. I think there's probably a little bit lower that you could probably get to. But let's just have a look on the 5. Yeah, so this is the lower end of the range. I tend to try and take my profit before it hits the lower end of the range, just in case of because of the spread as much as anything else. So just in case there's a bounce before, and also because of the spread, I can't go right down to the bottom. So yeah, I think there's a potential short there on the Ftse 100. I quite like it. If we think about potential drivers today, you know, what could be a potential driver for the Ftse 100s to the downside, then it's all going to be about this. Now, let's see if I can share my screen. There you are. New share, and we will look at this. There we go. Doesn't look that big, so let me see if I can make that a bit bigger for you guys. There we go. That's a bit better, isn't it? So yeah, let's look through what we've got today, and some CPI data from Europe won't be a big one, but this is the big one. MPC official bank rates and monetary policy statement from the Bank of England. That may well suggest that we could see some downside in the market, just because there could be a pausing of the excitement that we have actually seen. So yeah, I think there's a potential short on there. Not much else is today that would necessarily drive it. Unemployment claims may, but if we're thinking about today, it's really about this. And what that means to me is that if, let me just share my Ftse again. So yeah, what that means to me is that if the market does come up, really now I'm looking at time value. So I'm saying that 9 o'clock, it is 9 o'clock in the UK now. I'm looking at time aspects, and I've got 3 hours before that rate decision. So I would probably not do anything with this particular position for the next 3 hours. I probably won't continue to short it unless we actually get up to this monthly pivot. And for it to get up to the monthly pivot, we're talking about a near 2% rise in the Ftse 100 before we get a bank rate decision. That is incredibly unlikely. And because it's unlikely, that would suggest to me that would probably be, you know, a pretty volatile move to get me up there, so I can short up here. So my first short is going to be here. I'll try and take profit there. You know, you may see this daily pivot as an area to take profit. You might see this low as an area to take profit. Entirely your choice. But just to explain what I'm doing, I'm just looking for a short here. But if it goes to the upside, I'll be leaving this position on and not aggregating until the monthly pivot, because there might well be some kind of positivity before the Bank of England makes an announcement. But after 12 o'clock, if it gets up there before 12 o'clock, I'll be taking the trade. After 12 o'clock, I'll probably have to leave it, because they may well say something which is relatively bullish for the market. So yeah, that's the thinking behind this one, mate. I'm just trying to take just a little bit out of the market, and it's really back to the point that I was making, and maybe you were making as well, about looking at this market as a little bit rangy for a period. And this, you can see, or people can probably see, is now a little bit of a box that we've got here. Let's take this ray off. This is a little bit of a box that we've got here. So I guess what I'm saying is that, you know, we're at the top end of the box. So
sorry, I've been talking to you.
Yes,
with my microphone off. I better place this order, mate, because it's getting close to entry.
You go for it. I've explained, I think. Any questions, then put them in the chat box.
All right. So the entry level for this one, if you want to follow it, is 151.13. This is Euro Aussie. It's on a 30-minute chart, and I'm looking only for take a little bit out of it, similar to Ash. I've got a stop loss at 150.77, and I'm taking profit for the first time at 151.30, and I'll probably exit this trade at the daily pivot, which is not telling me. Little Dodd. Probably exit there 151.72. So what, 59 pips on a risk of 36, 1.5, say. You probably get just about 1-to-1 out of that if you take your profit there, first profit there, half off, second profit there. So it's not a massive reward on that one, but I think there's every chance it'll get to here, and that's where we'll leave ourselves safe in the market. And if we do get a daily pivot test today, then that's where I'll take profit. So that's crucial for this trade, to take your first profit there, 150, 130, and get yourself safe in the market. In other words, move your stop loss. What is it? Oh, 6 pips. I don't want 6 pips. Is that 6 pips?
Have you already got a sell position on this one, mate?
Yeah, I have. Yeah.
Nice. So you've effectively got a nice freebie here.
Pretty much. I've got the wrong TP1 there, guys. For some reason, I think it's the default one. That's why. There we go. There we go. TP1 17 pips, which is a whole lot better. All right. Why am I taking this trade? No idea. Just a guess. Right? Just kidding. Because I'm getting what I consider to be shots over the bow here. And look, don't forget, if you go to this daily chart, we're potentially going long here anyway. We've got reversal candle. We've bounced off a resistance level. We put in a new high low. We put in a new higher high. Potentially, this is another higher low. If that's the case, then you would expect that we'll take on this high at some stage. And if that's the case, then all of the profit that I've made yesterday and today will be sucked away. So whilst I'm seeing downside, yes, because of what I described earlier, the retest of that level and a very strong momentum. And I've got a bias long at the moment, the Aussie short the euro. So that it all makes sense to me. But this also makes sense to me that we can go back here in a heartbeat. So if this is taken out, that's probably not going to happen until we get down here. But I think it's worth the exercise, frankly. Like I said, this could very well go to here, and wouldn't surprise me. It would be against my bias, but it wouldn't surprise me at all. That's about it for that particular one.
It's an interesting one, the Aussie as well, because of the China situation. You know what could happen in China. I think the Aussies are an interesting currency right now. No indication from Philip Lowe that they're going to be doing anything with interest rates. And
well, nothing's changed, has it? I mean, at least they're stoic and they don't change. This is what we're doing, and we're not changing.
Yeah, and I find it quite fascinating with Australia, because they're pretty robust, you know, and completely different in some respects to what New Zealand have done. And I have to say, you know, where New Zealand were quite brave in many respects to move when they did and start the cycle when they did. I wonder whether it's going to bite them now. You know, I see visitor numbers going down in New Zealand. Those building permits we talked about last week as well, they're going down. I think New Zealand is slowing, possibly more than the other nations, and I wonder whether that might be a result of them raising interest rates in the way they did. I mean,
I was talking to a New Zealand resident who shall remain nameless, but whose initials are Paul Bottrell, the other day, and he was saying that New Zealand is actually in a very bad mess, not so much economically, but he was hinting that way. You know, the buzz around town and the violence on the streets, you know, all those sorts of things that sound very American to me, but he wasn't painting a rosy picture at all.
Well, the numbers don't, mate. The numbers don't. I mean, it's not, you know, it's not. You look at some numbers and they're okay, and but I suppose that's the point with it, is that, you know, unemployment numbers are decent in New Zealand, and they have been for a while. But because they're okay, then you start looking at the ones that are in the extreme areas, and there's about 2 or 3 sort of data points from New Zealand that just look a little bit negative. In fact, they look very negative. So that, compared to the likes of, like, even the UK, for example, you know, the UK is doing pretty well. You know, there's many of these nations are doing pretty well. Australia doing well. But New Zealand, when I looked at the data, New Zealand, from my eye, looks like the currency or the economy that is suffering more than any of the others. And as I say, I wonder whether that's because they went first. You know, that they started to move first.
they would. It's not the first time someone got bitten doing that. I've got to say, but normally it's the US who go hard.
Yeah.
That's interesting this time, and I'm pretty sure it's just because of the fracas in Ukraine, if I can call it that, that's held them back. I think otherwise, I didn't even read the statement. The clock, when I looked at it this morning, said 04:54, which is 6 minutes before the announcement. And I said to myself, no, another couple of hours sleep.
Oh, well, for the US.
Yeah.
Well,
and not normal for that, because it's a good opportunity to do a breakout trade, but I just didn't feel it was going to happen.
Well, the long and the short of it, mate, is that Powell says that the US economy is able to take the rate hikes that are due. That, we knew it was going to be a 0.25% rate hike, and he's basically saying, you know what, we can handle a few more. Whether that's true or not, is yet to be seen. Growth in some nations is there, but there are still problems, as I say. You've got the likes of China, and it's not to be kind of underplayed that the likes of China have got a few issues right now. I mean, there are some moves fiscally that could help things out, but I don't know what's going to happen now with coronavirus. Will it actually have another choking effect? This thing hasn't gone away yet, has it? It's still kind of like lingering. It's just that we've forgotten about it because of the conflict. So it's kind of responsible for us to say, well, let's stay on point, because these things do still exist.
It's funny, isn't it? That, well, I don't know if it's funny, but it's peculiar. I'll put it that way. There's always something. If it's not Brexit, it's not Donald Trump, it's not, Little Rocket Man. If it could be anything from any given day.
It's been a crazy few years,
doesn't it? Unbelievable.
It's been a crazy few years, and actually, maybe it's the best time in history to be a trader.
Certainly the best time to learn, I would imagine.
Yeah. But I mean, this is, and I don't want to sort of put too fine a point on this, because I don't want it to sound like it's a boastful thing. But things like that, I've been making more money recently than when things were quiet.
Yeah, you're having a good time.
The last 3 months have been brilliant, really, for trade from a trading perspective. And obviously nobody wants to see anybody suffer. And if it was a choice about making the sorts of returns or having people suffer, I would definitely choose to make less returns, because it's not about money. It's about just do the process and you'll make the money. It might take a little bit longer, but you'll make the money. So that stuff doesn't really matter. But it has been an incredibly kind period from a trader's perspective, because the moves have just been so accentuated.
They're certainly there. There's no question. Getting them at the right time, of course, is the art form. I'm just checking to see if we've got a message from John, because I can't see him in the room.
If there's anybody in the room that wants us to have a look through some charts of yours and talk about charts of yours, or if you've got trades you want to share and maybe tell us what you're thinking. I mean, it's not just about Jeff and I. We trade a certain way, but it's not necessarily something that for everyone. If there are any wave rider traders in the room, then we can look at some wave rider trades as well. And I won't bring up the indicators, but you can have the indicators on your screen, and we'll have a look at a clean chart. And we can discuss those things as well in a bit more detail. Then just post on in, because it's what this show is all about.
No, I haven't heard from John at all.
Oh, okay.
Look, I've got some more charts to have a look at. There's no question there. If you're up for that, then we can actually go. We can actually go through the week as it panned out for the game changer bars. Whose screen have we got? Yours or mine? Mine.
We've got yours. Yeah.
Okay. What chart's that? Aussie CAD. Why am I not trading that? Oh, because of that. Okay, got it. Sorry, I'm just, when I see that, I go, why haven't I got an order in? There's a reason. That was actually the first of our game changer bars for the week, Aussie CAD. The reason I'm doing this is because I think it's worthwhile to see what was possible from those candles, and if we actually did the right thing by not trading them or trading one or the other. And there's reasons for and against every single time. Game changer bar to the downside. Those of you who are in the room who've got no idea what a game changer bar is, it's a candle, bar, candle, whatever you want. Call them bars because it's easy to say. Whose high, in this case, is higher than the previous week and closed on or near its low. Now, you can't take these like anything in trading or anything in charting. You can't take these out of context, right? You have to have a context in which to trade that. So it's telling me, and what these things do is they point in the direction that the market supposedly will next go. Now, I'm not a fan of trading candles who point in the direction the market's ready to go. I prefer the other way around. But in this case, it is something that I have noticed over the last couple of years does make incredible moves. Not all the time, but if you use it in context, then it does work often. The context has to be on the primary chart being the monthly chart. And you have to be absolutely on point with the primary trend. So if the primary trend is up here, you wouldn't consider trading it down. But on the monthly chart, have we got a primary trend? It's a good question. Are we getting higher highs and higher lows? Better question. I don't see anything there that's really convincing me that we have anything. Maybe we've got that down, maybe we've got that up. I see nothing really that tells me we've got a primary trend. If anything, I would say it's potentially down, but I really can't give you a definitive answer to that from my viewpoint. We've got a higher high here, higher low, higher high, then we've got a lower low, lower high. What's next? Don't know. So that's the whole point. You've got to be in agreement with what the candle is telling you. The candle in this case is telling us go short. And so far, had you done that and were willing to take profit at the obvious level, which is here, you would be okay. But if you hadn't done that, you're pretty much back to entry. So a nil result there at this point, depending on how you trade. CAD Yen was next. CAD Yen on the weekly was a game changer bar to the high side. Now, I would have said this at the time, and if I didn't, I should slap myself with a ruler across the hand like that. I can't trade that here. The risk that I have to take is that whole candle, right? Telling me to go long, but I have to take the risk of that whole candle. And this is the thing with such a volatile market. Where is your risk? Your risk is very, very difficult to determine. And if you're willing to take a 276.5 pip risk for a potential reward of 61, then okay. Or if you just want to say, okay, it's going, then happy days. You just want to trade that, fine. Primary trend, is it in agreement with the candle? High, 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 low, high, 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 low. So we're trending long. So that would be a yes by just the candle. But I always look at context outside of that, and I find it very, very difficult to take that trade. Doesn't mean I have to take that trade. Once it's giving you that big breakthrough, then you pull down to the time frames and go, okay, what happened on the daily? Could I have got in here? Not for me, but maybe you can find a way on a 4-hour chart. There's your retracement there, right? You could pick it up maybe as that breakout. Depends on how you trade. I could pick it up on that pullback maybe on a smaller time frame. But that's the point that I'm making. Don't necessarily have to jump in and take that full risk, which is, a very, very poor reward for the risk that you have to take. You can sometimes pick it up as a pullback, as we saw here, and maybe on a 4-hour chart, happy days, away you go, because that risk then becomes way less for the reward that you can pick up. So that one would have worked had you been patient and, well, had you taken it. You're still not at 1-to-1 if you took the candle. Swiss Yen was the other one, or another one, again to the high side, again too tough for me to take. But again, there was a little pullback. Little pullback in here. If you can pick it up somewhere here, happy days. And there were probably opportunities to do that. You've now got a double top that you've got to contend with. But it does appear that this is in bullish mode. The fourth and final of the game changer bars for the week was Kiwi US Dollar. And that was telling us to go short. And similar to the first one, which was Aussie CAD, had you done so and be prepared to take profit down here somewhere, which is 3/4 to 1 or something, you'd probably be okay. If you hadn't, you're now going through a little bit of a world of pain, I'll put it that way, wondering if this is going to go long, and maybe it's looking so to do. Was the primary trend in our favor? It was going down, most definitely. So that would have been a trade that you could have taken if you were prepared to take on. Well, actually, that wasn't so bad because you could have taken profit. You'd probably want to get it to the monthly pivot, which it didn't reach, but maybe that level in there is the telltale level. So the point of the exercise is that those weekly game changer bars are pretty cool if you trade them in context, but don't necessarily trade the candle. Trade what it's telling you. Trade it as a directional bias. And if you can pick it up on a smaller time frame trading with that, then chances are you will get something out of it. So that's my little educational piece for the day, let me put it that way. The other charts that I looked at this week were pound Kiwi. I was looking to trade that short. How did that pan out? I didn't trade it, but I was looking to trade it short. Oh, that would have been okay for a little bit, but then actually it wouldn't have been. Well, I wouldn't have found a trade, but it's probably in a potential long buy position here rather than a short position, but it's a little bit indecisive. So as I said, I didn't trade it, but that's what I was looking to trade. I was looking to trade Aussie dollar as well, and I have been looking to trade Aussie dollar short for the longest time, and I need to kick myself fair in the Khyber Pass because of this one. I didn't take it. Well, I did take it. I placed the order on Thursday, I think it was, and it expired, and I didn't replace it. But this is a clear, absolute clear trade for me. Every single time I've got to trade that. Right? Why? Because it's a breakout of a resistance level. It's consolidated above it. It's rejected the level above it, come back below into the range, below the trade line, and then it's given me a retest of all the above. And you can throw the weekly pivot in there as well and call it a double cross. So there's a whole lot going on there suggesting to me that this is going short. Now, it didn't last too long, I've got to say, but look at the obvious take profit level right there, the monthly pivot. So I should kick myself in the butt for not taking that. I wouldn't have made any money on it, frankly, unless I took more than half off there, but that's one that I should have taken. Still waiting for that to come in or back in here and give me the opportunity to trade it short. Now, the reason I'm a little bit bearish the Aussie is not because I'm opposing what really now is a commodity play, I would have thought. And whilst ever commodities are buoyant, so will the Aussie. It's rather going back to the interest rate / risk off scenario that I believe should be actually in play. So it's more a fundamental bias that I've got than anything else. I can also see that most of the Aussie pairs are either at or come back below resistance areas. This is a case in point, Aussie versus the US dollar. Now, the US dollar, of course, is very much in the flavor because of what the Fed said and did. So that makes it all the more difficult to say Aussie long for me. So Fed going interest rate hike, I've got a risk off situation with a war taking place. I don't see, and I've got an interest rate or an RBA, Reserve Bank of Australia, saying that they're not going to raise interest rates. So those three things, from a fundamental point of view, are saying to me, I've got to sell the Aussie. The commodities are telling me exactly the reverse of that. So what do? Well, same thing I always do. I look at the chart, and the chart's going to tell me what's going to happen next. And right now, I'm seeing buying Aussie versus the US dollar if it gets to this level. But as it stands at the moment, the potential for this to come back underneath the weekly trend line and therefore into this range is still there. So whilst ever that's still on the cards, I can't move here with the Aussie. I've got to wait and see what happens. And like I said, it's a very interesting pair at the moment, as I've just described. It's an interesting pair because of those, I guess, contrarians point of view or contrarian point of view from the fundamentals, really. I'm completely confused by them. And until that resolves itself, I'll simply just look at the charts and do what the charts tell me. And the charts are telling me right now that the Aussie's on fire, but it is at a resistance level. So guess what I'm looking to do? I'm looking to trade it short on pretty much everything I look at. But it's got to come under here. It's got to come back to the resistance that's just been broken and get back underneath it. So until it does that, I've got hands on lap, can't do a thing. But it is my favourite thing to look at the moment. The Aussie really is.
Yeah, the other one. I mean, I know this will be almost a swear word to you, mate. But the dollar yen, I think, is also a potential short, and it sounds ridiculous to say because obviously, there's no way that Japan are raising interest rates and the United States have started, but I look at that as a potential short because what you're saying about potential resistance. Dollar yen's at resistance. Now the interest rate has happened. Has that been priced? Now, I'm not saying it's a turnaround short by any stretch whatsoever. I'm not saying that we're all of a sudden going to trend to the downside on a big move. But, you can see that the move to the upside has been pretty parabolic. We've now had the announcement. It was 0.25%. That was, as I say, that you can see by the move that was already priced into the market. Do we get some relief in the yen for a week or so? I think we do, and I think that there may well be a short-term move to the downside on the dollar yen as well. This
was ruling for so long. This head and shoulders, right? For so long, the market was just falling and falling and falling without question. It's now broken that, hasn't it? Yeah. The question is, how high does it go? Where does it find? Is that the level there where we are, right? That's the question we've got now.
Yeah.
And the answer to me is yet unknown, of course. It could take this out. But the point is, as you say, we are at a resistance level. And here's where, I start to get interested. Because here's where you can make your money. But not going that way. You can make your money by going that way until it hits probably that level.
Yeah.
And what happens after that is irrelevant because you're out by then, really, in my book anyway. And then you maybe look for long then if you think it's going to go long.
Which I think is probably the case. I mean, the difficult one, no two ways about it. Difficult one to convince the mind that the yen can be anything but short. But I think when you're looking at how markets move with extension and retracement, I wonder whether we might just get a bit of a retracement leg. And if it's part of people's strategy, you can trade it. If you are a trend trader, then of course you have to ignore it and just wait for that retracement to see if you can get into the long side. But I think a retracement on dollar could well be on the cards for a period. Same with oil, same with gold. I think that those markets start to maybe move higher for a little while before the reversal happens.
Gold. once again, I can't unsee that.
Yeah, I mean, I think gold is still a huge question mark. I mean, look at last week's bar. You know, it's where does that leave us by tomorrow? Very, very difficult to know. But a big bounce off the monthly pivot, and I suppose the obvious place to go long. You know, for a period.
Yeah, you want to have strong kahunas to trade it through that level, though, I would have thought.
Yeah.
Which is that a significant level, I wonder, in terms of price? That's an all-time high, isn't it?
Yes, I believe so, mate. Yeah, yeah.
2072, yeah, wow.
Yeah.
But this still intrigues me. And until it changes, you know, there's a lot of schools of thought around double tops. And if I live till I'm, I don't know, 267 maybe, how far back's that? 2010, 12, so we'll go to 2034 before I see the right shoulder form, if this is indeed a head right.
Yeah.
So, you know, who can stay in the market that long? No, that's not going to happen. But I can't not see this. You know, what, to my way of thinking, goes that way.
Yeah.
Oh, a bit more.
What I find is really interesting is that when I look at the gold miners on the Ftse, they haven't really done anything. You know, they're pretty much where they started. So I don't know whether that might be a bit of a signalling that you know, the likes of sentiment, for example, on the Ftse 100, it hasn't really done anything. I mean, there's obviously sort of some aspect of the Russia issue. We've had Polymetal kicked off the Ftse 100, or I think they will be kicked off this week because they are a Russian-based company, a Russian-based precious metals company. So I don't know whether that might be playing a part in it, but yeah, I mean, a lot of these haven't really done a lot, considering the moves, you know, with both gold and silver. You know,
yeah, they're back at their starting point quite a lot.
Yeah,
of them, you know.
Yeah, they haven't really done a whole bunch. Now I feel like we haven't got very long, and I feel like we should open it to the floor. I don't know, has anybody got any questions about anything trading related, you know, or have you got anything to offer anybody else that's trading related? Because this is your show as well. So let's
ask a question.
Yeah, and the thing is about, you know, sometimes it's a bit people get a bit nervous about asking questions, but the chances are there will be somebody else that is thinking of the same thing, and no question is too silly, you know, because this is how we kind of improve, because we kind of communicate and help each other, and you know, anything that you've got to offer will potentially even get Jeff and I to see something slightly differently as well. So if any of you have got any questions, then throw them in. Wave rider questions. If you've got specific trades you're taking on any wave riders and you want our take on it, let's have a look. And if nothing,
Paul's got a question.
Brilliant.
Do I see more upside in pound Swissy is the question. I'm just having a look at primary trends here, which appear to be down. And we've got a little channel in there as well that I'll pick up on the daily, I would think. Maybe not. I thought it was a bit more obvious than that, but here's how I now see the structure, Paul, for mine. And it's going to be a rectangle. And it's probably in here somewhere. Maybe in there somewhere. So if we zero in on that, then I do see more upside, but I don't see a whole lot more upside. You've come 300 pips. You've got, you got half that left. Would I be going long here right now? No. If you're in a long, here's what I'd be expecting. And I'd be expecting price to come and retest probably that level, and then go again, and then anything could happen here. But that's pretty much the trajectory that I see this taking at the moment. The reason I don't think it can go through there is because we are in a downtrend, a primary downtrend, in my humble opinion. So I think for that to break out of there, something has to happen from a fundamental point of view. Now, again, all of this against a risk off currency is somewhat of a surprise to me. Not so much that we've got a rally, but it's a sustained rally over, a week or more after we had this sustained sell-off down to the bottom. Nothing surprised me about ranges, right? But what's going on from a fundamental aspect does surprise me. That the Swiss yen, the yen, we understand why the yen's weak, but the Swissy you would expect, in my humble opinion, should overpower although Ash says the numbers in the UK are good as well. So I would expect, once we get to here, I'd be looking for short. That would be my analysis.
The pound is similar in many respects to the dollar. So what we've had is this rally going on in anticipation of today. In my opinion, we've got interest rate announcements today. What do the Bank of England do? What's their forward guidance? What are they suggesting about how the rest of the year goes? And there's a possibility that this particular price point is the price point that traders have said that is fair value for the pound for a 0.5% rate hike. And if that's the case, then you would expect there to be some retracement after this goes on. So that would be an aspect that I would throw into the mix. As you say, the Swissy is a risk-off currency, and the Swiss National Bank are, again, very, very similar to China. Very similar to Japan, where they do not want to have a situation where they would be raising interest rates. If anything, they're going in the opposite direction. So overall, there will probably be some further upside for the pound Swiss. But will it be today after the announcement? Probably not. I would have thought, it's very, very difficult to know, but I would have thought over the next few days, you might start to see a little bit of a cooling down with the buying with the pound. We might start to see it reverse a little bit. Same with the pound Aussie. Simon's asking about that as well, Jeff, the pound Aussie. I would have thought the same. Pound pairs become interesting because of today, because of the interest rate announcement. Now, where this one becomes interesting is this is quite the reverse, isn't it? Where you'd probably be looking for buying opportunities. But again,
yeah.
I want to hear what was going to be said, that the economy is doing okay in the UK. Governor Lowe is not raising interest rates for Australia. If the Bank of England's have some sort of as I say, forward guidance where they're saying that this isn't the last interest rate hike, we're going to be going further, and the numbers continue to back up the fact that will happen, I think the pound would probably strengthen against the Aussie. Great point of support. No reason to suggest it's going through these levels if you take the two the central banks' opinions right now. So I think further upside with pound Aussie, and maybe some sideways price action with a pound Swissy could happen. But the pound looks okay right now, and picking it up at support would be my play for sure.
And you may well have very early opportunity on the daily chart here. Really, it's showing me a potential reversal pattern. So you've got a double bottom sitting there, and you've got a higher high. I think if you look to trade a higher low here, however you get in the market, and how you pick that higher low, I think you've probably got a reason to do this. If you recall, I'm doing exactly this on. And you'll have to watch me change charts here because it's exactly the same chart, right? You look at that one, And look at that one. It's the same chart, exactly the same chart. So Euro Aussie is the same. And that's why I'm prepared to go long here at the moment against my longer term trade, which is short. So it's exactly the same trade, exactly the same chart. What we haven't got here yet is a higher low. I'm suspecting that it happens pretty much where we are, which is why I took an early profit on this. My first take profit level was just below where that line is. And I've taken an early first profit. They're expecting that we are going to get a rally here. Now, I don't know how far that goes. If it only goes to first resistance, then we'll continue short. But chances are it'll take this high on and maybe even take this high out. So, you know, the chart should give you an indication as to whether that's going to happen or not, as should this pound Aussie chart. But it's exactly the same trade, in my humble opinion. I would look, frankly, for that to come to here. But if you now got the opportunity to trade that long on a reversal bar, which this could very well be, don't forget, in my book, it doesn't have to be a green body bar to be a reversal bar and a tradable bar. If it looked like that sitting there, I think that would be reasonable. You may be early, but if you're early, chances are price is just going to go there anyway without taking you in. So I don't see that as a bad opportunity. If you can, you know, get a little bit of risk here, get your reward here, or your first reward here, and if it does go, make your money in this area. That would make sense to me.
I'll tell you where the pound is differing as well from the euro. As an example, is the numbers from Europe don't support them raising interest rates in quite the same way. You know,
okay.
Christine, she has come out and said that you know she would be quite happy to start the interest rate hikes. Well, certainly, you know, they're reducing the balance sheet right now, and she said that, you know, soon after they reduce the balance sheet, that's when the interest rate hikes will start, and they won't start before that. So we've got a little while longer before Europe move. The key really with Europe is that they don't have the numbers to back up interest rate hikes in the same way that the UK does. There's still all sorts of problems. The UK and Europe are both affected by the problems with Russia, but the Eurozone is affected more deeply. So I don't know whether they're going to be in a position to move in quite the same way as the others. Now, it's all about price. You know, we might have this fundamental view that this economy is stronger than this economy, so that will mean that we should buy that currency and sell that currency. That is true on the face of it. But then we've also got to consider, where is the price action when we are making our decision? And this is where we start going to the technical side to say, do we have an entry? Because if you look at the pound versus the yen, the dollar versus the yen, then of course the dollar is a strong. The US is a stronger economy right now than Japan. But the price action is so elevated that there's a point where the current dynamic between the two countries is priced in, and then we need something else to drive it higher. And I suppose that's the point with the dollar yen, and it's also the point with the pound Swissy as well. We need something else to drive that higher, because we need expectations to continue to increase to raise interest rates further. So you've got to use your strategy. You know, when you're sort of like considering taking these trades, you've got to bring your strategy into play after you've got your overall decision on direction. I think the pound does strengthen against the Aussie. Great point to try and get in, as Jeff's just illustrated. I think the pound probably does strengthen against the Swissy. Terrible point to get in. You know, so because we've already had the explosive move. So if you're in, as Jeff says, great to hold. If you're not in, this wouldn't be a place I'd be looking to buy.
I want to show you, before we leave you, I made no money out of this, but I think it's possibly the best trade that I've had in the last week. And it's Kiwi Yen short. Now, I entered here, not on a 4-hour chart, but on a daily chart. I entered because we're at a resistance level, and we had 2 reversal bars sitting there. So I took my entry there expecting to get a first take profit, I think, at that level there.
I'm taking profit on the Ftse as well, mate. Just taking profit on the
Cheers,
Ftse
mate.
as well. So we got a winner on that one to close out the week.
Happy days. Well done. So here's the importance of being fluid in this market, being flexible in this market. And I think we've said this a little bit. If you can't be in front of the charts, then get your stops in the right place and be prepared to take profit quickly. Now, I happen to be in front of the charts at the right time here. Thank goodness. Otherwise, that's what I would have copped. But I saw on a 30-minute chart, whilst I was in front of the charts, this happened. So I was in profit all the way down here, and I saw this bar at this support level. And as soon as I saw that, I moved my stops to entry and got taken out with this bar, I think. And then I thought, oh, no, I've done the wrong thing, have I? No, I hadn't. You could see what was coming with that bar there. So I got out, and my goodness me, look what happened next. It just went berserk. So I'm kind of, I think I'm happier with that trade than I am with anything else at the moment, frankly, because I actually was in front of the chart at the right time and could act and save myself. But where was I going with that? I was going somewhere. I've sacked the yen entirely. I'm now absolutely in deference to the fact that it's an SH1T currency right now, and I shouldn't be looking to trade it as a strength currency at all, despite what happens. Even if they launch nuclear weapons at the moment, I don't think I'll be looking at the yen. It's just not doing what you would expect a safe haven currency to do. And there's reason for it, as Ash pointed out. So it's a no from me. No more yen, Ash. That's it. Done.
Okay. Okay. I'm just going to very, very quickly just tell you why I've taken profit on the Ftse here, just to kind of, and this is, you know, purely for educational purposes. And I'll show you what I've got and why. Because do I think it could come lower? Yeah, I do. But this is just the way I do things. I like to get out if I see a point that it could reverse from here. Now, if you look at this chart, then it's evident, I think, where the support line is. There's a support line here and there's a support line here. So why come out here? Well, just when we were talking earlier on, I decided I better draw a little trend line, and I can see from down here to here. And if I extrapolate that to the left, and I put this on a 5-minute chart, just to tidy it up down here. Maybe there. Maybe it's there. Then I also have a support line here. So you can see that this would have come down to the target, but I for the sake of a couple of pips, I'm not bothered about that. You know, for trading from this point down to that point, if it's making money, I'm much more interested to make money on the day than I am making a couple of pips. Now, I only saw this after I'd placed the trade. I only sort of like looked at this in further detail after I'd placed the trade. But this point here is a potential buying area. So I don't like trading beyond a support line if I've traded short, and I don't really like trading beyond a resistance line if I've traded long, unless I see something very specific in the market. So and the reason that I'm saying that this is an educational piece is that I think Jeff would agree with me that the first thing that we should do as traders, that our first job as traders, is to find support and resistance on the chart from price. You know, if we can do this from price, then we are going to be in a much better place. And forget your pivots, forget your moving averages and all that kind of stuff initially. You know, that this is stuff that you can lay on after. But find it from price. find where it bounced, find where it bounced, find where it bounced, find where it bounced. Then you know that this is a level. You know that there's a level there because traders have continued to buy up here. Find where it bounced away from, and here, and then you know that there's a potential level to trade away from. Now, if there is a pivot, which can happen, which exists at these areas, the pivot then becomes an opportunity. Now, this is personal, this is subjective. For me, unless I've got something around a pivot, the pivot is weaker. It doesn't mean it's not a trading opportunity. It still may well be. But unless I've got something around the pivot is weaker. I much prefer to see price and something, price and a moving average, price and a pivot before I am sort of saying that I have got an opportunity. Now, if I know that I'm looking for a long, then if I knew I was looking for a long here, which I'm not anymore, then this area here would be of interest because it's much more likely to bounce. Same when we look at gold. If you know that you are looking for a long, if you look at this pivot, look at where this exists, and if we draw in a level here, a level of on price as well, on that price low, and we just come out a little bit, then look what we can see. It's a little scruffy, but you can see that there is a potential level of support. If we move this here, there's a potential level of support in this zone, and we can see it here again. In this zone, there is support. So when it comes down to this area here, this price is interesting. The fact that the pivot's there makes the price point even more powerful. WTI, exactly the same. Look at this pivot. Look at where the pivot exists, right on this support level. Right, this was previous resistance. So now it's come back here. This is a support zone. So we're looking at price. Then the pivot comes into play. We look at silver. Look at where silver bounces. Silver doesn't even bounce off a pivot, but look, price. So price is king. Price first, then indicators. Then we're starting to use our indicators to help us. If you open the chart, and this is a mistake I made, which is while I'm trying to illustrate the point. If you open the chart and look at what your indicators are doing to take trades, you are missing a huge. I just realized that. Oh, sorry, mate. A huge part of the detail. So price first. Get good at learning about price. Trend lines, horizontal levels. That's really all you need to start with, and then patterns kind of come into play after that. And then start looking at what the indicators are doing. Do the indicators back up your area? And if they do, and they back up your overall sentiment idea, then you've got a much more powerful trade.
I rest my case, Your Honour. Absolutely right. The evidence has to be there. If the evidence isn't there, that'd be Angus. Then don't take the trade. 100%. And you need more than one piece of evidence. Anytime you need more than one. But 100%. Look, I only look at charts. I don't look at whatever's around them. It's the pattern that tells me. And when price is at that pattern's juncture, if it agrees with something else, like a pivot, like a trend line, whatever the case may be, and price from a previous event, whatever. I mean, I'm just repeating what you said, Ash, but I agree with you 100%. Yeah. It's probably time to get out of here if I'm starting to do that.
Yeah. Okay. Well, many thanks to everybody for joining us, as always. I mean, please feel free to ask us questions. That really is why we're here. And if you don't really know what to ask because you're still a little bit confused, then maybe just let us know where you're at. If we know sort of what kind of traders are in the room, then we can possibly angle some of our discussions around the level that we're at. But thanks so much for joining us, guys. We really, really do appreciate it. Thank you, Andy. Thank you, Simon. And thank you to you, mate, as always, for being my trading mate. Buddy. Have a great weekend.
You bet. I'll do my darndest. You can count on that. Just one thing before you go, guys, and I should say this every time, but not everybody knows exactly how I trade. And if this trade or this order hasn't triggered on Euro Aussie, if you're following it, it's above this level here, don't forget. If it hasn't triggered before the expiration of 6 candles, so it's a 30-minute chart, 1, 2, we're on our 3rd candle. If it hasn't triggered after another 3 candles, cancel the order, because it means something else is going on. Okay, that is it. Thank you again for being our trading buddies, guys. Have a wonderful weekend, and we'll see you next week. Bye-bye for now. See you, mate.